Devin, it's a pleasure having you with us as well. Thank you very much, as always, for joining us with all of that perspective, as you do. Well, we have Manish Bhandari, CEO of Vallum Capital Advisors, joining us right here in our studios. Manish, great to have you with us here. Thank you very much. You know, before we hit air, I was telling you, I remember exactly a year ago, you'd come on the program, sat right there, and you'd basically call the peak for chemical stocks and IT as well. I remember chemical very starkly because I think that was the peak. And stocks, of course, did very poorly after that. So what's on your radar today?
What's the expectations on what we expect from you and what our audience?
Yeah, it was too much of exuberance which was floating around at that point of time, and so was the case for the IT companies also. And that did played out because you have a stock return is a combination of a good fundamental as well as an valuation. So you can have a situation where the valuations were running quite ahead of the cycle, and which was the case. Today, if I have to ask, if I have to look back and say that, if I have to stretch my imagination and see that what goes in next 2 or 3 years, that we could be bracing for a flat market. And I keep on hearing about the debates what you have about a decoupling or recoupling or so, and I don't buy any decoupling theory that, yeah, you can have a portion of a domestic economy which is decoupled from a fundamental point of view, but still you have a...
No, the economy is actually...
partly decoupled.
The market, the index.
Absolutely. So index don't decouple. You can't have a situation where you have a worst of the coming through for the developed markets, and you are expecting different outcomes.
Would you have imagined in your lifetime?
Yeah.
Have you ever seen a market like this, where the US is down 25-30%, and here we are 6% away from all-time highs?
Yeah.
Manish, that is incredible, isn't it?
Yeah, this is
and
incredible.
It's sustained now. We're almost towards the end of this year now.
Yeah.
So, I mean, what do you make of it? That is, to a limited extent, a little bit of decoupling, maybe. Not completely.
Yes. But you can't stretch this for next argument for next 2 or 3 years or so.
Yeah.
And if the index has done well, so you have a possibility of time value corrections also. And something similar what happened in September 2009, post the recovery which happened in the Lehman crisis, and till September 2013 or so, before the new change of regime happened. So those are also the possibilities and outcomes which could happen if the index has done too well for a period of time.
So Manish, let's take the theory that India is not decoupled and it's going to be impacted by what happens in the US and Europe, etc.
Yeah.
Now, in the past crisis, we saw some severe EPS downgrades out here in India.
Yeah.
When the global financial crisis took place, India faced EPS downgrades of nearly 25%. In the 2018 tightening cycle, India's downgrades were about 15-17%. So far, the EPS downgrades have been very limited to a few sectors. On the whole, maybe 2, 3, 4%, 5% at best. Do you get a sense that if we are going to be impacted and this situation continues for a lot longer, we're in for EPS downgrades?
Absolutely. You have the exports slowdown, which is visible now. And if you have a situation, look at the backdrop to the whole context today. You have a huge dollar crisis globally. And now this time it is coupled with food inflation hitting to a different level altogether. So most of the world crisis, if you look at global crisis, happened when the dollar index has gone up substantially, or the dollar shortages have happened in the process. If you look at 8 or 7 or 8 or 10 crises in the last 30, 40 years or so. So what maybe global market is expecting? Global market is expecting dynamite fishing, which is mean to say that there is a big whale which is sitting, and you do hear about a Credit Suisse or something else maybe tomorrow or so. So till that settle down, then the global market doesn't settle, and then for us to expect anything meaningful out of India won't happen. And what also happening contrary to the old fact is that if you have a high food inflation, then naturally there will be a demand destruction or rub-off effect on the other sectors, and which will get reflected in the IT or many other sectors, which is a discretionary consumption sector or so. So that will sweep into some kind of EPS downgrades over a period of time. So I won't be waiting for it to happen and then to react to it. You have to take some kind of a leap of faith in the process.
Hi Manish, thanks so much for coming down to the studio, a little away from you guys. But you know, as you said, IT as well as chemicals, the last time we chatted, you said there was some froth that was brewing in, and I mean, you got it pretty much right, because those have been the big underperforming sectors. But the other one that you spoke about was realty, if I remember correctly, as well as textiles. Both of them dull sectors, you know, for the last 10 years or so. But suddenly those sectors have come to life. Do you continue to remain positive on those sectors, and do you believe there is a bit of a catch-up for these names?
So you are making two cases. One is about the business case and second thing about the stock price case.
Yes.
So mostly in the textile, you have the spinning companies, you have garmenting companies and big bit here there. And the third leg of the textile companies, which did well at that point of time, were the home textile companies.
Yeah.
And if I have to look at the situation today, most of these companies are struggling for some odd reason or so. You have one of the biggest wealth destruction which is happening globally because of the equity market destruction, because of the bond prices destruction. So for home textile companies, which is a discretionary consumption in US and the global markets, is really going to be a struggle. And on the spinning side, you have a problem with the high cotton prices globally. The cotton prices are shooting through roof and then up and down and again maybe at significantly high level. So I don't see that the textile from a stock market perspective will deliver you superlative returns at this point of time.
Realty?
Relatively better returns. They won't deliver relatively better returns from a stock market perspective.
No, Manish, I'll ask you, what about the realty space, the real estate, as an asset class or as from the stock market perspective as well? Play directly, play by the finance themes, or play the ancillaries out there? Real estate.
Yeah, so good that you still remember. Last time I did had a positive view on the real estate, which I changed after a long period of time.
Yes.
But if I have to look at from a real estate stock price of point of view, just look at what has happened in last 1 year. You have one of the biggest inventory sell downs, or the clearing of the inventory has happened. So you have one of the best return on capital employed and the ROCs and incremental ROCs, which has already happened to these companies. Unless until you are able to catch up with a similar kind of earning trajectory or maybe earning upgrades, I don't see any great time for the realty stocks to really significantly outperform. The business will be good enough. From a stock market perspective, I don't think so. It's going to be a muted returns for these companies.
You're sounding cautious, but what you said right in the first answer is what scares me. You said we perhaps are in a period like 2009 onwards, all the way till late 2013. And we were just looking at the index results at that period, right? We closed 2010, December 31st, 2010 at about 6,300. And we exited 2013 at about 6,300. 200, basically with 200-point change in 3 years. Is that what, I mean, obviously it won't repeat exactly.
I don't know which chart gives you a linear return for the equity market.
It doesn't.
None of the chart gives you a linear returns, and that's what our expectation is. Every day we come to morning and says that there's some linearity of the returns. Answer is no. You have patches, and what an equity investor supplies in terms of owning an asset which is expected to deliver you superlative returns is the volatility in the process or the patience game in the process. So you would have the patches which are
those patches? Let's get to what you like, Manish. What do you like in the market right
now?
And if you want to name names, that'd be great.
Absolutely. Yeah. So if I understand what are the themes which are now where the sand is shifting is, I see a trend where I'm a believer that the venture capital or the startup investing has been seriously challenged, and it will get challenged further, at least from the stock markdown perspective. So who are going to be the winners? When I look at the situation, who are going to be the winners? Are the companies which can really buy out many of these companies, the startup companies and their know-hows and integrate with the brick and mortar companies. And I saw just yesterday, I saw one interesting company, VMart, which just bought a significant LimeRoad, and LimeRoad has been in existence for maybe a decade or so, and which is a wonderful tech team. And for a brick mortar company like a VMart to go back and says, okay, I want to buy you out completely, is a very interesting phenomena. And when I look back and see what Marico has done for years and years together, they have built a lot of competences. And so at least, so what happens is that if you have deflated asset prices, at least on this tech side, you will find many of these companies which will make that crossover and integrate those companies. Because what happens in tech companies, either you have one or two which really holds the roost, otherwise for the rest of them there's no value unless.
But I don't understand. So how is that how are you making money in the process? I mean, you were so you gave the example of VMart. So
yes.
You'd buy VMart on the back of this?
Oh, absolutely, absolutely. You have an acceleration of the adoption of the tech for the company, a brick mortar company like VMart, by at least they have a leap of at least 4 or 5 years. They would have never had a competence to build this themselves, and suddenly you have a leap because you have a value sitting on at this point of time. So it will be an individual stock-specific game. So I don't see a sector which can really give us shakeouts.
So this you'll have to buy once the news comes out, right? There is no way to know which company is going to be making.
Absolutely.
So
you have to have an evaluation that You refer to, Prashant, you refer to a period of 2009 September till 2013 September, maybe roughly. So there were enough companies which gave you a superlative returns while index was up just 20 basis point upwards. So it is going to be an index, it is going to be in a stock market picker's paradise. It's not going to be in a, you can take a big leap of faith on the individual sectors so easily.
You spoke about a period of high in food inflation as well, right?
Yes.
That typically means good news for farmers. Therefore, should you look to buy some tractor names or maybe on the fertilizer? I'm just trying to understand the kind of theme, you know, broad-based, or you give us some names that look attractive to you.
Yeah, you're putting me in a fix on giving the names, but at least, yeah, very interesting question. We have one of the best times, at least on the food names, which the cotton is up or many of things. But what has been missed by the overall market and why there is a rural slowdown? So if I have to look back, just see what has happened is that the yields have compressed for many of these. Right, the acreages have compressed. We have one of the most intriguing times when you have the once in a century, you have a 3 La Nina back to back, which only happened third time in the century. So what has it impacted is the yield of the crops. So finally, what farmer is losing when you have the volume which goes down. So you have to compensate significantly on the price side. So it is going to be a tug of war in the crops where there is yields which have gone down and the prices has gone up. But yes, I would make a strong case that the agri sector looks interesting from the perspective that India has subsidized the agriculture and we are turning out to be a significant agriculture exporter in the world. And that's a strong currency what we have at this point of time in our hand, and there will be companies which will become a beneficiary. Rice companies in the process will become a beneficiary. We are doing huge exports.
Producers, you mean?
Producers. Producers, yeah, at least who
not fertilizer or agri imports or...
No, because the cost of production has gone up substantially for these companies also. Yeah.
Manish, it's a pleasure. Thank you so much for dropping by. I mean, I'm sure Nigel are in the newsroom and we also have a lot more questions, but we've been asked to wrap. So you must make another visit and we must continue this chat.
Thank you.
Happy Diwali to you, your family, your team. Thanks very much.
Thank you very much.
Thanks a lot.